So we can go and get started. Welcome. Thank you for coming. You are in the Lessons from Building a Scalable Credit Reporting Platform talk. This is credit reporting, also known as furnishment for those in the industry. A little bit of background on, I guess, myself and Bloom Credit, where I'm the CTO. Personally, I started my career a long time ago at a web agency, and in 2001, ended up joining household finance, which was primarily doing consumer lending. Eventually got bought by HSBC, but in 2001, I joined a group called eHouse. Everything at household had house somewhere in the name, and they were trying to figure out what to do with the internet. So 2001, it wasn't even clear, right, what how a financial institution would go and use it. Certainly not to originate an account. Maybe they could do customer service. Obviously, we've come a long way since then. But after a decade or so at HSBC, had some additional stops at Avant, which is an online consumer lender. It was part of the spin-out of Amount, which offered that technology to other institutions to be able to get into online lending. And then joined Bloom 2.5 years ago, and as I said, Bloom CTO. Bloom, we're focused on helping other fintechs work with the credit bureaus. So whether it is getting data out of the credit bureaus, so you're doing an inquiry, trying to go and pull a report on a consumer, we've got an API for that, so you don't have to worry about the specifics of the credit bureaus. Request formats, we normalize that data so you don't have to worry about how it comes back. And then more to the topic today, we also help a lot with furnishment. So furnishment's the process of reporting data back to the bureaus. So we have APIs, so somebody's got a system of record, can work, submit data through our APIs. We'll go and get that data over to the bureaus. So that's kind of our bread and butter. The presentation, really, I've got 4 sections, but really there's kind of, first part is setting the stage, and it's a little bit of a crash course in furnishment and credit reporting just in general. And then the second half is a bit more technical on what exactly we've built, and if somebody else in the audience here wants to go and build some of this themselves, some things that you may want to go and consider. And hopefully, actually, if you have other problems that just look similar, right, like the solutions may be translatable to your problem domain as well. So we're going to start off with really kind of a basic question, which is, how does something end up on your credit report? And unfortunately, it's complicated. I'll do my best to kind of get you a Schoolhouse Rock version of how a transaction or how a loan becomes an item on your credit report. So let's talk about who's able to go and furnish. So if you're furnishing data, reporting data, what my line of business is, you're managing the collection of consumer payment obligations. So lenders, credit cards, mortgages, that all certainly fits in there. But there's other types of consumer payment obligations, rent, utilities. These are things where you've basically signed up and said, you're going to go and pay. Utilities are often post-paid, right? So that's why they make sense from a credit reporting perspective. Rent is a lease agreement, right? It's got a term you're supposed to pay every single month. So you have to be involved in that business. That's sort of the starting point. You don't necessarily have to be the one who's actually renting out a unit. You don't have to be the landlord, right? You might be a payment portal, right, used by the landlords, but you need to be involved in managing the collection of those payment obligations. Second, you need to go and complete a credentialing process for each credit bureau. So the credit bureaus want to go and make sure that you've got these obligations. They want to look at your policies, your procedures. Even though it's 2024, they want to go and see your office. They want to see the signage on your office. They want to confirm that your door to your office locks, that you have a filing cabinet that locks. and that you have a paper shredder. So if you don't have a paper shredder, I'm sorry, you can't go and furnish data. But if you do have one, we can move on to the next one, which is you need to go and maintain compliance with the FCRA. I think probably a lot of people in here are familiar with the FCRA. It's the primary legislation relevant to usage collection of consumer credit information here in the US. So compliance would mean that you're going and providing the most accurate current data, that you are able to go and handle disputes. So if a consumer handles disputes in a timely manner, right? So if you're the furnisher, those are the things that you have to be doing. And then, last but not least, if you're able to do all this, you can't just send the Bureau CSV, you can't just send them paper, although obviously they care very much that you manage your paper properly with the filing cabinet and the shredder. You actually have to send them something in, it's called Metro 2 format. And that report needs to come on, at a minimum, a monthly cadence. Although, also, it's difficult if you send it more frequently than monthly. It might be confusing to credit bureaus. So generally speaking, everyone who is furnishing data furnishes on a monthly basis. So we'll dig a little bit deeper in here, starting with some maybe surprising facts to the audience. Maybe not. Maybe you guys are all seasoned pros. But first and foremost, there's no legal obligation to report data. And maybe this is a good moment to just pause and say, I'm going to make several impassioned pleas during this presentation about the importance of going and participating in the ecosystem and reporting data. I don't mean it to be self-serving because we're in this line of business, but really credit data powers the ecosystem, and if there's not good data, you have lots of inefficiency in the market, which ends up hurting kind of everyone involved. So anyway, why would you want to report? Maybe we'll ask that question first. You typically, the first one that comes to mind is if you've got a customer who's not paying. I will report them. They'll be on their credit report. They'll have a black mark against them. That's going to go and convince them that they should go and pay, right? Great. Another reason why you would probably choose to report is if you're in the business of helping people build credit, right? It's in 2024, we have lots of businesses that are focused on really underserved parts of the market. So these could be folks who just turned 18, recent immigrants, folks who just don't have, they haven't had the time, right, to go and establish any sort of credit. So you're going to help them, right? It's an underserved market, and obviously in that scenario, you need to be able to go and report. You might also report just because you're concerned, right, that your customer gets overextended, and then down the road they might not be in a position to pay. Great, so that makes sense. We should report. Reasons why you might not report, though, number one, the Bureau might look at what you're doing and say, this is too novel. We don't know how to deal with it. Remember, they're mostly expecting files on a monthly basis. If you have a typical buy now, pay later type loan, that's 4 installments every 2 weeks. So that's a trade line that is opened and closed in a 2-month period. Bureaus don't necessarily know what to do with it. They certainly didn't know what to do with it when people started issuing buy now, pay later loans. There may be other types of novel credit products that folks at this audience, at this conference are creating that bureaus just don't know how to deal with. You might also choose not to report if you're worried about your customers being poached, right? And this happens with some of the biggest banks out there, right? If you've got very good customers and you're showing history of this customer making on-time payments, using their credit, paying it back, well, there's a whole credit marketing industry where you can go and send your criteria for a pre-selection, or that would be the term, where you are looking for consumers who meet certain credit attributes, and then they'll go and mail out pre-approval offers to those folks, right? Probably all have gotten one of those, and so by suppressing or limiting what you report, you're going and sort of protecting your base of customers from getting poached. But ultimately, right, like not reporting hurts the credit ecosystem. Secondarily, right, there's no actual process to become a credit bureau. You can just wake up one day and discover that you are one. This happened to LexisNexis. And they went to court to try and say that they weren't a CRA. They lost, right? Judge decided that they were, in fact, a credit bureau. So, really, if you've got data that's being used in credit decisions, and if you're making that data available to others, it's hard to argue that you're not involved and you're not a CRA. All right, so there's 100 million consumers in the US who we would generally consider to be either thin file or no file. So there's 330 million people living in the US right now. So that's a huge percentage of the population here, right, which really doesn't have enough information in their credit files to be able to make good decisions. And then you have 12 million consumers who have a material error in their credit report. Material meaning, either they were denied credit or had to pay more for credit than they should have because of an error. Right? And that hurts everybody, right? It's friction in the system that's, money out of a consumer's pocket that's going to extra interest that could be going to, something else, right? Major purchase, another subscription service, something. So we don't want that friction in the ecosystem if we can avoid it. All right. Now, the Metro 2 format I mentioned before was actually created in 1997. 1997 was a great year, right? The first Harry Potter book was published. Candle in the Wind and Bop were on the top of the charts. XML was not released for another year till 1998. Java was 2 years old. So a lot's happened on the technology side since 1997. Metro 2 is still kicking. It's 400 pages long, and the guidelines get updated once a year, basically, by CDA, that's the Consumer Data Industry Association, which is the trade group for the major bureaus. Last but not least, ITINs. So if you're not a US citizen, but you're here legally, you have a tax identification number. These aren't really accepted as a means of going and pulling credit, which isn't to say that the credit files don't exist for these folks. It's just that you have to match them off of other information, name, address, date of birth. So you can imagine how that makes it more difficult for parts of the population to go and get credit. And by the way, it's like 13% of the US are not US citizens, they're immigrants here legally. So that's 40-some million consumers, right, who are gonna have trouble. It's just unnecessarily hard, right, to try and find information about them. And when you're furnishing data, right, to make sure that that data that you're submitting gets associated to the right actual person. This is the world of credit reporting that we all have to live in. So some of these challenges may be obvious, some a little bit less so. One thing that we talk about a lot is the impedance mismatch. I've drawn at the top a representation of a relatively modern system of record. This is a card management system. It's a fairly well-known card management system. They've got public API docs. I've just kind of represented it, roughly speaking, here, so you can see different groups of their APIs and the sorts of endpoints they have. The notable ones that would make sense here is you've got like an account holders collection of endpoints, which have things like users and addresses, and an account servicing set of endpoints, which have things like statements and payments, and an account management one. So this all makes sense for most engineers, right? We deal with object relational databases and object-oriented programming, and we understand how these things link together. Metro 2 is a flat file format, so it's based off of segments. There's 9 segments. Every segment's composed of a bunch of fixed width fields. So your best case scenario is really that you're taking different elements out of your object relational model and trying to map them into the different fields that have to live in that flat file. But really, some of them just can't be mapped at all. One of the things that you typically report in a base segment would be like the highest credit amount, right? So if you think about a card, right, it's the maximum you've ever used it, or if you have like a home equity line, it's the most you've ever drawn it down. You can't just look at the current state, right, to go and get that information. That requires like a look back over the lifespan of the account. Similarly, there's like a payment history profile. So there's just information that the bureaus through the CDAA and the Metro 2 format are interested in going and getting on a monthly basis that doesn't even really exist within a typical system of record, and you've got to go and compute it or otherwise derive it. And that sort of stuff happens kind of all over the place. If you get past that and figure out how to actually get to that mapping, your secondary problem has to do with data accuracy. First point here has to do with account states and state transitions. If you're building an LMS, a CMS, any sort of like system of record, the different states that an account can be in, really are representative of how you think about the customer lifecycle, right? And how a customer representative, like somebody in your call center or back office, is managing that account and moving them through the entire lifecycle. It's about your business processes, right? But Metro 2 has its own particular way of thinking about account statuses. And so again, right, there's a mapping exercise, and that mapping exercise may not be one-to-one, because what you consider to be one account state might actually fall into a couple different buckets, or vice versa, right, from the bureau side. So getting those things squared away is important. Also, like going back a little bit to the previous slide, data quality can't be assessed by looking only at a single moment in time. So you can have a perfectly formed file that meets the specification. You've read all 400 pages. You know exactly what's allowed within a given field, and it still may not be accurate, right? So just as a very simple example, one state you might have is 60 days delinquent for an account. If you didn't have it marked as 30 days delinquent in the previous month's reporting, how does that make any sense, right? So you can't just go and look at it and say, yes, like 60 days delinquent is a valid status. I put it in the file validates. You actually really need to go and do a look back over time to make sure that you're reporting accurately. And then last but not least, right, these reporting guidelines aren't static. They evolve slowly, right? They get updated once a year, but they do change, and they change in ways that impact how you generate the files and how you report data. And if you're building like a system of record, the things that you probably matter the most are getting the statements out to your customers, making sure that they pay, being able to service those customers when they call in or email in. Like, this is probably like 99th on your list of priorities in terms of things that you want to be going and doing, right? And if you're selling a system of record, this is not going to be the feature, right, that wins you the business, right? The feature that wins you business, if you're selling a system of record, is going to be much more around all those other things I just mentioned, how it's going to reduce call center calls, how it's going to improve efficiency. But it's super important, right? So poor data has real-world negative impact. So for a consumer, right, if there's an error on their report, it affects their ability to go and get a loan. I think overall, the credit bureaus have done a lot to go and try and get people monitoring the reports, but not everyone monitors the report. And like the unfortunate reality is, like, you may be in the situation where you're looking for credit in that moment that you discover that there is an error, right? Like if your lease is up and you're trying to get a new car because you have to turn in the old car, and then discover an error, and that error is impacting your ability to get a new lease or what the rate is they offer you, that's a real world impact. And then it's real world impact for your business too. Like, you misreported it, but now you're gonna have a representative who's there working that dispute case, doing the investigation, replying to it, right? again, friction in the ecosystem, bad outcomes for consumers, bad outcomes for companies. So getting this stuff right is really important. All right. If we want to move into a little bit about what we've done at Bloom, or just how anyone in general might be thinking about furnishment. I guess, as I mentioned, I joined 2.5 years ago, so April of 22. The company had just put together really an MVP of furnishment, our furnishment API and product. So I got to come in there and say, all right, let's look at the objectives, the things that we really want to go and achieve with our solution as we try and go to market. So the first was around Metro 2 coverage and figuring out account types, the segments, right? It's the Metro 2 term, right? Like, what are we going to go and support, and how far do we want to go? And we wanted to try and be ultimately able to cover most of the market. Yeah. Secondarily, we wanted the ability to process arbitrarily large portfolios in an 8-hour window. Why 8 hours? I should say, right, I had some experience. This is the one at Bloom is the second furnishment system I inherited at Avant. We also had one, which I did not build, but then became responsible for operating. And furnishment for Avant's loan portfolio could take 24 hours. And there's often like a lot of pressure to go and get that file generated because there were errors and you need to fix them and rerun it. And honestly, the same is going to be the case here, right? So we can go and put in lots of checks, but things happen, right? A client of Bloom's or somebody who's got a system of record that's submitting data to the API, just more generally, right? Like they may have something going on that impacts their ability to go and get that data there at the time that they thought. There might be errors in that data, so you want to go and give yourself enough window to be able to like let somebody know, fix the problems, rerun them. What you don't want to do is be too late in terms of going and getting a report into the bureaus. The bureaus start to wonder what's going on if you've missed a date. And honestly, right, again, real consumer impact, right? If somebody had a loan, they've been paying it off, right? The longer you delay getting that information to the bureau, the longer that shows up on that consumer's report as being an outstanding obligation instead of one that's been paid down or paid off. We want it to be fault tolerant, have the ability to handle exceptions gracefully, because as I said, we know that things are going to happen. We want it to be as hands-free as possible, and we wanted to really focus on data quality, right? Data quality is just really part of, it's a key component for us in terms of how we go and help the ecosystem and how we help other people build innovative credit solutions. Those turned into some design principles. The first is we wanted to do like a shift left data quality. Shift left, I think plenty of people have heard about shift left as a general philosophy in software development and security. And we wanted to do the same here with data quality. Right? The earlier we catch the error, the better. So if somebody's submitting bad data and we can catch it right at the point where they're making that API call and posting it in, that's the maximum amount of time for them to be able to go and fix it. If we wait until after the file is generated and do some sort of quality check at the end, that's the worst case scenario because now we've really used up a lot of clock time to go and address those issues. Secondarily, we wanted to do a fan out, fan in. I think this one is just how we decided to approach arbitrarily large. We figured that if we could build something that could scale out horizontally, that would be a good approach to deal with enormous portfolios, which is ultimately our objective. And then leverage widely used technologies wherever possible. There's plenty of edge cases, corner cases, gotchas, kind of in any problem domain. And we wanted to focus our energy on solving those within the reporting space, not necessarily in how you do workflow management or something else, right? So wherever there was widely used technology that made sense, we wanted to adopt it. And I think like this is a talk about Metro 2. We're at a conference sponsored by Moov, so fair to point out like the Moov Metro 2 library is absolutely a key piece of what we've built. And I think where it excels at is in generating the file to spec. Like I said, right, from our perspective, data quality is more than just generating something to spec. It's about having that bigger picture view of an entire account. And we really do like Moov, and have started trying to contribute to the Metro 2 library as well. So we're ramping up our efforts there, and talk a little bit about some of that later on. All right, so when I joined April 2022, monolith architecture, not surprising for an MVP, single-threaded Metro 2 generation. The only thing we could generate was the base segment. The base segment is the most important segment. It's the one that really has the core account details. It took an operator it's an engineer, hands-on for the entire process. Our first client had a relatively small portfolio. We did 50-ish validations on that data and ended up taking about 2 hours to generate the file with 4,000 accounts in the portfolio. Where we are now, service-oriented, it's horizontally scalable. We support 6 of the 9 Metro 2 segments, so we don't support employment or mortgages yet, or specialized payments, which are really like balloon loans and not exclusive to mortgage, but primarily like used in the mortgage space. So you can sort of see where our focus is and where we've like pushed off a little bit to the future. On-demand or scheduled generation, there's no operator required to go and run furnishment. We've got 600 plus validations now, and we had a 25,000 account portfolio run in under 30 minutes, which is great. And then we had a 150,000 account portfolio recently get onboarded. So we were, of course, predicting 180 minutes, and it ended up taking about 8 hours. So that led to a new, it's fresh off the press, right? It's not in the slides, which had to be done a month ago. But yeah, it led to some new findings, which I can talk about in terms of like, why didn't it scale exactly as we expected? But identified some things and working on it, and the intention is for sure to get that 150,000 portfolio back down, running quickly. The architecture that we came up with, and the architecture that I would kind of generally propose for somebody who wants to do something like this, looks like this. So on the left, you see furnishment API, and this is really like the remnants of our monolithic MVP. Some of the data gets stored directly into Postgres. Some of it is what we would consider sensitive data, so we tokenize it. The data is encrypted, replaced with a token. The token's used everywhere else, right? So we have a tokenization service that supports handling of the sensitive data, and our clients or really anyone, right? The card management, loan management system communicates via API with that furnishment service. So that's the left side is really all the data ingestion. As I mentioned, we do have we've taken shift left from data quality wherever we can, so that furnishment API also goes and runs a number of checks to try and catch issues with the data as early as possible. When it comes time to go and actually run a furnishment, we settled on temporal as a technology to go and help orchestrate a workflow. So you see a couple different sets of temporal workers here. We have generation workers and transmission workers. The generation workers, as I mentioned, right, do rely on the Moov Metro 2 library to help with the final step in that process of formatting. But temporal is orchestrating all of their work, and then the generation workers are constantly calling back to the furnishment API and the temporal service because those are the source of truth for us. Once a Metro 2 is generated, we store it, there's an opportunity for people to review it, and then ultimately there's a whole nother workflow for going and getting this routed properly to the bureaus, handling what information the bureaus send back about receiving it, which is maybe unsurprisingly pretty varied from bureau to bureau in terms of acknowledgement and how any issues get communicated back to you. Yeah, the other points to note here, right, is we do have a pretty lightweight user interface, so somebody can go and kick off a reporting job. We didn't build this from scratch. We ended up looking at some internal tooling platforms, so on Windmill, windmill.dev, and we built all of our internal admin, control plane type tooling on that platform. So we built a small user interface for our ops team to be able to use to kick things off. Also, as noted by the clock up there, we have some things running on a cron, right? So I did mention that the bureaus can be a bit overwhelmed if you're sending them files more regularly than once a month. That being said, right, if you've got a good reason to do so, they can go and, especially if you talk to them in advance, deal with some of that information. So one of the services we'll go and offer folks, especially on companies that are focused on credit building, is just when a new account is opened, to get that onto somebody's credit report as soon as possible. It's a very easy furnishment. Nobody ever needs to review that because you haven't really gone and drawn a balance down yet. It's really just a very simple, hey, there's a new account. And so that's one of the types of things that we have just running on an automated basis. So we built that, and then, yeah, lessons learned, pitfalls, all that good stuff. Scalability. So one thing that was a good note, right, maybe it was a little surprising to us, maybe not to this room, but the infrastructure scaling was a lot easier than expected. For the most part, things just worked, right? We made the decision to go and switch from Aurora Postgres to the serverless Aurora Postgres, and it was seamless, and it goes and scales up and scales down as you would expect. I guess the caveat there is you can go and put your own limits on it, right, just to make sure that it doesn't go out of control. So as we went and looked into why didn't our 150,000 record portfolio finish within the expected 180 minutes, this was one of the findings, right, was that our own limits put in place with best intentions by our DevOps team ended up throttling us a little bit because we capped how far we would let Aurora scale out automatically. HPA, that's the horizontal pod autoscaler, that also just works great. The problem is your services may not. So in particular, the thing to be aware of there is around graceful shutdown. So when the autoscaler is looking to spin things down, if your service isn't able to handle that gracefully, you may have some less than desirable outcomes. So as we saw in the previous one, the furnishment API, as an example, is a service that is used internally from our Metro generation. It's also externally facing, right? So one thing we encountered is the horizontal pod autoscaler deciding it was time to scale down the furnishment service because the big furnishment job, all the requests coming from the Metro 2 generation service were coming to an end, and it was just killing off active client sessions because we didn't have graceful shutdown really handled in the furnishment service. So those are the sorts of things, right, to be aware of there from infrastructure scaling, but by and large, that stuff works. Fan out, fan in architecture is great. I think a question that you'll get to, though, is how wide should you fan out? Do you want to just let things fan out arbitrarily wide? Do you want to have control? There is, of course, a cost to scaling up and scaling down. I think most of us probably are aware of this just from lambdas or maybe the study we've seen the most of, right? What's the cold boot time of a lambda function and how long, what's the cost to just serve one request. So in my 150,000 record example, scaling out to 150,000 instances of a container would certainly have startup shutdown costs that vastly exceed the benefit from going that wide. So you've got to find some place to go. We parameterized it, allowed us to experiment, and then the question was, how do we experiment? So we had to go and build our own test harness for this. We built it using K6. So I think, if you're building a furnishment system, I would definitely recommend fan out, fan in to process things. If you have a use case that isn't furnishment, but still fan out, fan in makes sense, I would say try and build in some of this from the start so that you can experiment with exactly how wide you need to fan out and fan in. Because if you build it, this question will eventually come up, right? Bottlenecks. Some of the validations we ended up having to move to the client-facing API, right? That was a good place to go and catch things. The generation was faster, right? But then we had slower API responses as a result of it, right? Because now, our client who's trying to submit data, we didn't just accept the data and then, respond 200 OK. We're doing checks. So we had to make sure we were scaling up that furnishment API, accordingly and doing our best to otherwise speed things up so they were able to still pump data in at the rate that they wanted to. Overall, shifting left was the right thing to do there. Like any good murder mystery, right, the butler did it. Database indexing is the butler in this case. For sure, it's easy to forget about database indexing, especially if you're using an ORM, which I think is very common practice these days. It's just not top of mind for folks, but it's the easy place to go and look, and definitely helped with our performance. The calculation logic itself, some of those calculations were a little bit more compute intensive than others, so we moved some of those into Go. The furnishment service I mentioned was monolithic. It was actually written in Python. The Metro 2 workers for temporal are all Golang, so we moved some of those. There's some marginal improvement, but just getting the compute closer to some of the other orchestration had benefit. That being said, not everything actually makes sense to go and move. So not on this slide yet, but another finding from our 150,000 that took longer than expected is we started looking into Numba, which is Python just-in-time engine for going and helping speed up some of those calculations that without doing a wholesale rewrite of the furnishment API that exists. And then you get to the very end of the process, which is you need to write this file out. So really string operations. We found a concurrency issue with Metro 2 library from Moov and ended up submitting a enhancement back there, so you can now do your writes from the Metro 2 library with in parallel. You can parallelize them, so that can actually help you go and get your file generated much quicker if that's really where your bottleneck is. So there's no silver bullet, surprise, right? But that's what you got to do is just sort of attack one bottleneck, solve it, and then find the next bottleneck and move on. Getting close to the end here, so workflow design, there are definitely some intricacies to it. I'll talk mostly about our experience with temporal, but I think all workflow solutions are relatively similar here. You've got different activities. They need to communicate with each other. There's obviously limits in terms of the size of information they can pass between each other. If you had 5 records and 5 workers, they each have responsibility for 1 worker, so you can just say, here's the account you need to work on. If you have 500,000, you have to tell your 5 workers, here's the 100,000 you work on. 100,000 UUIDs obviously takes up a lot more space than 1 UUID. Size limitations, if you're not aware of them, will bite you at some point. Similarly, workflow history has a limit to it necessarily. 10 Temporal is a good solution here, which is to create sub-workflows. Things that work when you've got a 4,000 account portfolio, won't necessarily scale up. So you need to just understand your workflow engine and make sure you're using it appropriately. Default policies may not work for you as well. It's something that you may not have looked at. And then, like I said, we expect failures to happen. Exponential back-off is a great approach here. If it's truly just an intermittent failure, it picks up, reprocesses, and moves on quickly. If it's a deeper problem, that exponential back-off means that whatever the problem is isn't getting hammered while you've got the engineers involved trying to figure out what's really going on. And then, here at the end, we wanted to get the operator out of the loop. We built these tools. Just our own sort of tip here. We dog-fooded it for quite a while. We thought the tool was working great. We still couldn't get the ops folks to adopt it. The key ended up being Slack integration, because once the operators were getting notifications, oh, the job has started, the job is finished, the job had an error in Slack, all of a sudden they jumped on it. We're very excited about it, because they didn't have to sit there and babysit the tool or come back and look at the tool to see what was happening. As I mentioned, we already started using temporal cron to help get operators out of the loop. And then last but not least, again, for furnishment, this definitely makes sense. For other use cases, it may as well. Where we had problems in our data set, right, we would quarantine the problems. So that meant that everything that didn't have a problem could still complete to the end. You could go through any additional checks that you needed to go through on that data. If you needed to go and submit it to the bureau, right, because you're up against a time crunch or something, you could, right? And then the quarantine files, the quarantine records could go and be looked at separately. If you had time, you could merge those quarantined ones back in, but basically adopting a strategy where you didn't have to, atomically fail the entire portfolio or pass the entire portfolio was an important thing to help here. So we've reached the end. I guess my closing thoughts. Furnishment, definitely not the first thing people think about, but it's a really critical, important process in the financial ecosystem. If there isn't credit data out there, things just kind of grind to a halt, and so it's easy to take it for granted, but we should try and avoid that tragedy of the commons and make sure that we're doing our part to go and get data into the ecosystem. And secondarily, this is not a technology challenge here, right? Timely, accurate reporting is definitely achievable with the tools that exist today. Just, it can't be a best effort activity or best effort priority for your business. It's important, and we really encourage everyone to treat it with the importance that it deserves. Thank you all for taking time to attend. Thank you to the sponsors for putting on this conference. Hopefully learned a little bit about credit reporting, and happy to take questions. Yeah.
With the work that you've completed over the last couple of years, have you seen a difference in the clientele that you're bringing in and what they're asking for?
Yeah. So the question is, over the last few years, 2.5 years, have we seen a change in the clients? Definitely, right? So I think initially, we had some folks who were really at the start of their journey. They were just establishing programs, probably in that credit builder space, who were looking and knew that reporting data was critical to their offering. I think now we're seeing clients with existing portfolios who have been furnishing, who are starting to realize that they have problems and are looking to move, right? Big, that 150,000 portfolio, didn't just show up out of nowhere, right? It showed up because they had been seeing issues and wanted kind of a more robust solution. What we've built has also been integrated into, I think, 10 or 12 system of records at this point now. So it's not even that you have to do a direct integration. If your credit product is being managed on one of those platforms, it's easy to enable our reporting solution. Yeah, thanks. Any other questions? No? All right. Thank you all very much. Appreciate your attendance today. All right.